All right, happy Tuesday. Anthony Special here with Special Analysis. Hope you're having a wonderful week so far. Guys, if you're enjoying this content, these videos, if they're finding them valuable, if this has helped you in any way, I appreciate, of course, your loyalty of watching them. But if you could below, like them, share them, subscribe to the YouTube channel, it would be greatly appreciated. It just helps me get this out there to everybody. It's completely free. It's something I do because it was something I was looking for when I started trading and investing, and it just wasn't out there. I am partnered with Traders Agency. We have plenty of paid-for products there. Again, this is not paid for. This is completely free. I have nothing to sell you. So I encourage you to take advantage of this. I encourage you to share this with your friends and family because I believe it's super valuable information. So today what we're going to do is we're going to jump into the chart, and I want to kind of break down, this is a past trade that's transpired. I want to kind of take a look at it from a few different angles, and I want to kind of give you a little insight to the way I analyze the market and then how I take that analysis and put it into action. So we're going to look at an oil trade that I had taken. This stems back to a period during December 15th to January 15th of 2021 to 2022. So this is about 3 months ago or so, 4 months ago, roughly. But I want to show this with you because this was a textbook breakout, a textbook trade that transpired. So what I do is I basically start with a blank chart. With that blank chart, I start my analysis on a monthly time frame. I draw a couple trend lines just to kind of get a feel for where we are. Then what I do is I break it down to a weekly chart, dial in a little deeper. This blue channel here identifies where my weekly support and resistance is. So now I have a little bit of a better idea of what I'm going to be dealing with when I get to it. And then I dial it in even a little further to a daily chart, and that's where these teal structures come in. So what does this all mean, all these drawings? Well, simply put, my trade plan tells me that when price closes above or below a teal structure by a full 1% confirmation on a daily basis, that's a trigger to buy the market to my next support or resistance structure. If price closes above or below a blue line on a weekly basis, meaning a weekly settlement, meaning we can look at a weekly chart, and we want to see where price closes below the blue line by a 1% margin, then we're going to look to trade towards another area of support or resistance. So we have a daily close and we have a weekly close. So we're looking for one or the other, and when that transpires, this is what it turns out to be. So in this instance, this is a daily close on this candle. I have the arrow here. This is a daily settlement well above 1%, which is what I'm always looking for. So I take my little ruler at the line, I go to the close of the bar, that's a full 2.81%. Now if I look over here, prior to, I didn't quite get a full percent. It was like 0.3, 0.4 of a percent, maybe a half a percent. So that one didn't count, but this one did. This one met my criteria for an entry. So what I do is I set my entry price, I give it a little bit of room because there's always that little bit of wiggle. So I know I want to buy the market right here. And that price is $75.75. That's where I want to buy the market. I'm going to go to my previous swing low right here, just where this candle had previously broken this area of support and resistance. I want to drop just about a quarter or so below that candle wick. So I have my stop down there at 72. And I know my target, at least at my entry, is all the way up here at this blue line. There's no other resistance that I should be looking at except this line right here at this point in time. So with that being said, I knew I had a target at 82, let's just say less than 1%, 81.60, 81.50, and rising ever so slightly. So as this trade transpired, you can see you have 1, 2, 3, 4, 5, basically 6 days. This market went sideways that you had the opportunity to fill this position. So for 6 days, we knew, this was what we call a consolidation period, and then we took off from there. And as we took off, you could see we set a higher low, and then we set another higher low right here with this impulse correction impulse, and then we hit our target. So we had our target here at 83, and this yielded a profit of $7,250 per E-mini full contract that was traded. Times the number of contracts you trade, gives you the number of what this trade was worth. But this all transpired in just a matter of days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. So 2 weeks, a little more than 2 trading weeks. So 2 full trading weeks plus 2 days. Gets you into a trade like this. Gives you the opportunity to go from an entry, a conservative stop, a realistic profit target, and this is how it transpires. So does this happen often? And people ask me this question. It does, and it doesn't. I am super, super strict when it comes to my entry criteria and my trade criteria because I don't want to take a lot of trades. I just want to win them when I do trade. And I know that it's impossible to win every trade. But if I stick to this ultra-conservative methodology, I will only find a handful of trades a year, which is all I'm looking for. I like to be in cash. That's my favorite position. But I know when I get in, there's a high probability of the trade working out. And that is, of course, the most important thing for me is that high probability, the low risk, that is my conservative approach. So that kind of wraps up for today. I just want to break down this video for you, give you a little insight to the way I approach the market, just so you have a little better understanding of my analysis and how I would employ my trade plan. And guys, this is an actual trade I took, so this is not something I went back and hypothetically found. This is an actual trade idea that actually transpired, what was actually taken. So, I will leave you with that. Again, if you've enjoyed this video, if you find it useful and this content valuable, please below, like, share, subscribe. I greatly appreciate you and your time that you've spent with me. I hope you are enjoying these series of videos and newsletters that I have been sharing with you. Again, you can find me at anthonyspecial.com and, of course, over at Traders Agency with my colleagues across a broad branded slew of research products that may or may not interest you, but we'd love to have you become part of the Traders Agency family. We'd enjoy having you. There's tons to learn, tons to benefit from. And with that, guys, I wish you a beautiful and blessed day, and we will talk soon.